there's from that age of like 24, 25, when you leave university to age 35, we experience probably 10 to 12 of the like biggest major life milestones that we're ever going to experience. We're getting married, we're having kids, we're buying homes, we're getting divorced, we're starting businesses. Like there's a lot going on. And if you haven't got someone there that's either guiding you or pointing you in the right direction or making sure you stay on track, it's pretty easy to just spend willy-nilly and put everything on afterpay. And exactly. Or have a plan to begin with.
Welcome to the Young Money Podcast with Ross Marais. This episode of the Young Money Podcast is brought to you by More Time Financial, a financial planning, money management and financial education business helping young Australians to make smarter decisions with their money.
Hey, it's Ross, and you're listening to episode 27 of the Young Money Podcast. Today's episode is a recording from when I sat down with James from markets.com.au to discuss all things financial planning, including what does a financial planner actually do, who should seek financial advice, the benefits of working with a financial planner, how much it potentially costs, or how the fees work, plus much, much more. As always, if you have any feedback or questions about anything discussed in this episode, be sure to message me on Instagram. Hope you enjoy the episode. Now, before we get started on today's episode, this is just a friendly reminder in order to keep our lawyers happy that in preparing this podcast, myself and any contributors have not taken into account any particular person's objectives, financial situation, or needs. So before acting on any of this information, you should consider its relevance to your personal circumstances, and if required, seek the assistance of a licensed professional.
G'day everybody, James from markets.com.au here, and today we are very lucky to be joined by Mr. Ross Marais from More Time Financial. Ross, how are you?
Good, thank you.
Ross is a financial advisor at More Time Financial. He's got 6 years under his belt. He's also the host of the Young Money podcast that you can find on your different mediums. Spotify is where I listen to it today, helping young people that are getting into the different industries and trying to learn about everything that is money, relationships, all of these things. So make sure you look out for that. This is really exciting because generally at markets we try to teach people about all the aspects of property and focus on that.
Yep.
But one of the most important aspects is budgeting. And that's where I thought it would be interesting to have you in to talk about sort of the management of finances.
Definitely.
And if there is room for property or what else there is out there that could facilitate a property to be purchased and owned and lived in and sold and so forth. So let's start with your CV in under 1 minute, Ross, if we can squeeze it in.
I'll try my best. So graduated university about 6 years ago with a Bachelor of Commerce in majoring in financial planning. Started working for a major financial planning company that if anyone read too much about the news at the moment, they'll probably know three-lettered company who that is.
Okay, we'll leave that to them.
So got some really good experience there, but quickly realised, I was only there for about 12 months, but quickly realised that the traditional financial planning world or industry is tiered towards older people gearing up for retirement with large superannuation balances. And it's all about how we can get more money into super so that we can retire as soon as possible. And that was fine, but I quickly got upset or got disgruntled by the fact that I wasn't allowed to talk to people my age. I realised there was this big gap between what we were doing and then people around my age or our age starting the first job, buying houses and doing those things. And so I ended up leaving there and starting the company More Time Financial. And we've been going for about 4 years.
Beautiful.
And from day one, we had this idea that we were going to focus on people my age or our age, our generation, help them manage their finances. And that's what we've been doing for the last 4 years.
So there was a gap in the market and you're trying to fill that gap.
Yeah, definitely.
It's an interesting one because generally money is held by people who have worked harder over time to achieve it and then they're able to invest it more easily. So were you finding that people in our position still had enough to give even though there were houses to be bought, families to be raised?
Well, I think that's another one of the big misconceptions, that the only thing that we do is invest people's money or talk about superannuation. And what I realised, there's this huge, even a bigger gap between, okay, well, how do we, if we're earning all this money, because like most people, we go to school, go to university, and then we started working in this job where for the first time in our lives, we've probably earned more money than we've ever earned in our lives before. But no one really tells us what to do with it. So obviously we went to the same school. They did a great job at educating us, but I don't think no one really talked to me, I don't know about you, about what's a credit card, what's bank accounts, what's savings,
How do I manage
what's interest, what's tax, what are all these things? So we go at the base level and we start from there and say, okay, well, you've got income coming in, you've got expenses going out, what's left over?
Yeah.
And then we can start, okay, well, is a house part of that your plan? Do we want investment property? Do we want live in a house? And so we look at the cash flow and the budgeting side, and then we can start, okay, then if we've got money left over, let's talk about investing or investment properties, and we build from there.
So help them take a deep breath and then align things into a budget of some description and move forward from there. It's fantastic advice. Well, excellent. Then we're in the right company. So let's start from the basics and then work our way up, like you like to do. So we'll try and keep that model in this interview.
Sure.
So what does a financial planner do as such?
So we help people make smarter decisions with their money.
Okay.
Now that's obviously quite a broad statement. Now that might be something as simple as you want to buy your first home. Let's put in place a savings plan to help you do that. Put together a deposit, help you buy a house. Now that goes from something as simple as that to all something a lot more complex where grandparents, parents have maybe just passed away and you've just inherited $500,000, $1 million. What do we do with that money? There's tax implications. Do we invest it? Do we pay down debt? And obviously there's a lot more complexities that come with that. We might be working with a young business owner that might manage 2 or 3 or 4 different businesses. They've got company finances, they've got company tax, they've got staff wages, they've got a lot of things going on, but they work with accountants, they might work with lawyers, but no one's really looking at their personal finances. So once all the dust is settled, you've paid all your taxes, you've done everything, you've got all this money in your bank account, now what do we do with it? So we spend a lot of time trying to get people financially organised or financially sorted, where they might have 10 bank accounts, they might have 6 super funds, so we just want to kind of simplify everything, work it out, what it is they want to do, and align their lifestyle and financial goals to what's going on in their bank account.
Fantastic. Okay, excellent. So that is what the role of the financial planner is. And if anyone gets confused by what a mortgage broker comes into it and a financial planner, they are fundamentally different.
Correct.
And an accountant and a financial planner are also fundamentally different. Would that be correct?
Correct.
So what is the difference between an accountant and a financial planner? Because I know that I hear people try and align those two quite often.
Definitely. So the way I like to explain it is that we've got your accountant that handles everything to do. So business is probably the best way of explaining it. You've got an accountant for your business. They help you with your GST. They help with your staff super, your tax planning for the business. They also help with your personal tax. So there's that small element that they help with your personal tax that fits in the personal world. So you've got your business world and you've got your personal world. So the accountant helps a little bit on the personal tax, but their main focus is on people with businesses.
Side. Yeah.
We then step in on the personal side and manage everything to do with your personal finances. So you pay yourself a wage from your company, you take a dividend or whatever you do, comes into your personal bank account. Now what do we do with it? Yeah. Are we paying off your debt? Are we investing it? Are we putting it into super? And all those things that sit on your personal balance sheet or your personal side. So then you say, right, I want to buy a house. So now I can't tell you, or we can talk about the structure, but I can't legally, under my license as a financial advisor, tell you that you should go and set up a mortgage with ABC Bank or XYZ Home Loans. We then get the benefit of a mortgage broker to come in and say, okay, you tell us, because you're the expert in that field, what loan is suited for you or your personal situation.
Okay.
So we pass your information to a mortgage broker, they help set up the loan, set up the bank accounts, then you come back to us and we continue planning.
Yeah.
We then go, okay, we need to talk about your tax return or do some tax planning. Let's get the benefit of an accountant. Yeah. So we kind of see ourselves sitting in the middle, working together with you, kind of like like an architect would on a project. Yeah. Work out what the plan is. What are we actually trying to build? Okay, now let's go and get the experts. Let's go and get the town planner in. Let's go and get all those other experts to come in and help you build.
And have a complete picture.
Yeah. So you bring in the expertise of different advisors or different professionals. But yeah, I think that's a key thing that a lot of people just, still today, people think I'm a mortgage broker, other people think I'm an accountant. Yeah. And it's hard to try.
But it's different.
Yeah, but it's hard to try and unbundle that because we're all talking about money, I guess.
Yeah. Well, you're not telling a client to buy this house or that house. You're saying, would you like to buy a house? And if you would, how are we going to structure everything around you so you can facilitate that purchase?
100%.
Understood.
Yeah.
So what qualifications then should we expect from a financial planner? So do you need to go to university or are there certain certificates? What qualifications are involved?
Probably a timely question because we've just gone through a massive change and a massive reform that up until right now, up until 2021, I believe, you don't have to have a degree to be a financial planner.
Okay.
So you can get a certificate or do a diploma, and you can legally give financial advice as long as you're licensed.
Right.
Now, they've just changed the rules that you have to have a degree from going forward 2021. I think it is January 2021. Anyone that's given advice now has to have a degree.
Right.
So I was lucky enough.
By 2021.
By 2021. So I was lucky enough to get my degree early and then start working, whereas traditionally a lot of older planners, they didn't have to have a degree, so they didn't want to spend the money or spend the time doing it. So we've going to have this mass exodus in a couple of years' time of all these older planners either having to go back to uni, or most of them are thinking about retiring or leaving the industry. So
would that be a question then that you would recommend people ask of their financial planner?
Definitely. Yeah. So it's a bit of a challenging one, because you've got, like my answer to that would be a mix of paper educations to have some sort of qualification and experience.
Yeah. Theoretical or practical.
Yeah. So I'd like to say a combination of both, because you're going to have older planners that are the most qualified with experience, but don't have a piece of paper to show for it. So it's kind of like, well, there's a bit of a disconnect there. But I think a combination of both to make sure they're qualified and can give the advice that you need, and then have the experience to be able to have seen the.
So currently a certificate will answer any qualms for qualifications, but by 2021, people like yourself with a degree will be the only people eligible to give financial planning advice.
Yeah, legally give financial planning advice.
Okay, very interesting. So a good question for people at home to ask, should they wish to bump their salary or figure out how to compartmentalise their finances? That's a good question to ask.
Definitely.
Okay, fantastic. So who then should speak to a financial planner, and why are they speaking to a financial planner?
I like to think of it like, I use the analogy quite a lot, so if anyone's heard me talk, they'd probably get sick of me saying this, but I think of it like a personal trainer.
Okay, yeah.
So you want to get fit and healthy. Do you need a personal trainer? Yes, no, maybe not. Some people are motivated enough that they know what to eat, they know how to exercise, and they can do it themselves. Then there's other people that know they need to do something, but they either don't have the time, they don't have the motivation, or don't have the skills and knowledge to know what to do. Yeah. So then they go and hire a personal trainer, they draw up a diet plan, they draw up an exercise plan, and they hold your hand and they be accountable, and they give you the support to help you reach your fitness and health goals. Okay. So if you translate that to finances, there's people out there that can do everything themselves. They're happy to do the research, they've got the time, they've got the knowledge, and they're more than happy, and they can do it.
And more power to them.
They can do everything on their own, and that's great. Then there's that other subset of people that either they're time poor, they've got so much going on that it's too complex to manage. So they've got multiple investment properties, they've got multiple businesses, they've gone through divorce, or there's some sort of complexity that they just have no idea what to do. And then there's other people that there's timely, so people are time poor, they're too complex, or people just don't really know where to start. So they started their first job, they've maybe just started having kids, they're just not really sure what steps to take. They know they need to do something, that everyone knows they need to be better with their money, or they probably should be saving a little bit more than they are right now, but they're not really sure, like, do I put it in a term deposit? Everyone's telling me to put it into super, my parents are yelling at me about putting money into super, should I do that? And we've got a lot going on, like especially in our age groups. Like there's
everyone's got a side hustle nowadays.
Well, there's from that age of like 24, 25, when you leave university to age 35, we experience probably 10 to 12 of the like biggest major life milestones that we're ever going to experience. We're getting married, we're having kids, we're buying homes, we're getting divorced, we're starting businesses. Like there's a lot going on. And if you haven't got someone there that's either guiding you or pointing you in the right direction or making sure you stay on track, it's pretty easy to just spend willy-nilly and put everything on Afterpay. Exactly. Or have a plan to begin with. So that's, if you talk about starting with basics, that's where we kind of start to say, what is it that we're trying to do? Why are you going to work each day? Yeah. Why save? Like everyone says, oh, it's so hard to save money. It's so hard. I said, I agree, it is hard. But why are you saving money? Yeah. I don't know.
So look at those goals.
Well, exactly. So it's like it's pretty hard to run a race and finish a race if you don't know where you're going. So it's pretty hard to save money if you've got nothing to save for.
Yeah. So people who really are in any position in their life, but if they just want a little bit of glue to hold all these pieces together, then it's good to find some advice of somebody who sees it every day and deals with it every day.
Yeah, definitely.
Okay, they're the people. And then the benefits, obviously. I think we've covered it a little bit. We may as well try and, if we can succinctly put them into points, what would be those benefits of engaging a financial planner?
So we can save time. So because we see it every day, we're experts, or majority of us are experts in the world of finance. So we can save you time by, rather than you searching around and trying to figure out what to do, we can give you advice and make it nice and simple. We've obviously got the knowledge of what needs to happen and the ins and outs of it. We see it every day. I've been doing it for 6 years and I still learn things every single day. So if we find something, and it just amazes me that like we're still learning. So the everyday person on the street who are not in it every day, they've got no chance of knowing all the ins and outs of it. So
very important.
The Australian government and the Australian financial world makes it really, really difficult for the everyday person to understand what is actually going on. The rules change every year. The politics stuff everything up every year. So to actually know exactly what the rules are and what you are allowed and what not allowed to do, then it makes it quite difficult. So we can obviously help people do that to give them the advice of what needs to happen.
A lot of it is clarity of what I'm hearing. A lot of it is just giving people, just getting the smog out of their head and just getting a bit of clarity and understanding that there are ways to achieve the things that they want in life, but it takes discipline and time. And sometimes that time element is not something that they will be able to find at that time in their lives, and that's where you need to find somebody who can.
Or some people just aren't willing to wait to do things. So if you tell someone you need to save for 5 years before you can buy that investment property or buy that home, when they're so used to
Netflix watching a whole season,
or getting
1 hour,
getting food delivered online, getting Afterpay, getting clothes delivered the next day. So I think that's definitely a big element.
The world's getting faster.
It is.
It is. But that's a positive as long as you're able to harness it, I suppose. Okay, so before they come and see you or your team, what should people be doing? How should they be preparing before they come and meet their financial planner?
So I know for me, the first two things we need to try and figure out from someone is where they are right now. So what is their current financial position? So if you can speed that process up and kind of gather that information, then that's going to be a big help and save a lot of time on both sides. So if you can know exactly what your income is, if you've got an idea of what your expenses are, you don't need to have an exact budget, but have an idea of what it is you're spending on a weekly or monthly or yearly basis on all those expenses, your rent, your mortgage, all those things, where your superannuation is, if you've got any investments, if you've got any investment properties, just trying to get all that information together, because that's the first thing we need to do. So before we can do anything, we need to figure out where you are right now. So we need to gather all that information. So the more information that they have on themselves, the better. And then 2, trying to have an idea of what it is you're actually trying to achieve or what you're trying to do. So talk about those goals. So you don't need to have it crystal clear of saying, I want to do this, and this by this date, but just have some sort of idea of what it is or why do you want to be better with your money. So you sit down and say, okay, well, why are you here? So, well, I don't know. Someone told me I should come talk to you. So if you've got an idea, that's going to put yourself in a good position to obviously start planning. And
very good advice
for us to be able to help.
Okay, which once again will really give you that clarity, because I think that half the time when you ask somebody, because if somebody walks in, they say, I want to buy a home, and I say, all right, so what are you looking for? And they can't answer it sometimes, and it makes me think, all right, well, if you just sit and think about it for 5 minutes, surprising how little people are able to just sit by themselves and think about things for 5 minutes, and then you'll find that it's not as hard as you've made it out in your own head, because you put up roadblocks, which is a natural human response. You put up roadblocks to things that you want to achieve sometimes because you don't think that it's possible. But if you take that time and just think it through, so before going to see your financial planner or somebody who's going to assist you, it's good to take that time. You go, all right, well, maybe, I do want a house. I've always wanted it. I remember that now, because you can forget it. And then that's your next step. Beautiful. Very good advice. Okay, so then when it comes to property, if we can be more specific, how would you assist property buyers and investors as a financial planner?
So again, kind of going back to that, taking that holistic approach. Now, you've got more experience in property than I do, but you would know the ins and outs that comes with it. But there's a lot of things that go into either buying, selling, or building property. So you touched on it earlier about the budgeting side. So before you can buy a property, you need to have a deposit in most cases.
Or it's very well advised to know what you got.
Yeah. So obviously you need to have the income to be able to support any, even if it's an investment property, you need to have the income initially before the bank's going to let you loan any money. So we help them look at that part. Say, okay, you want to buy a house. Can we afford it? Let's run the numbers. Let's work out the income and expenses, and let's plug in a $600 a week mortgage, or even if it's an investment property that you're going to rent out, what's the shortfall? Is it going to be negatively geared? Where's that money going to come from? So negative gearing, great in theory, but it means you're losing money. So we need to try and figure out, can your budget, your personal household budget, afford to take on this property, whether it's to live in or invest? Then
because things go wrong, and then how are you prepared to combat when things go wrong?
And then there's the tax element when it comes to property. So if we're thinking about investment property in particular, there's the tax deductions, there's the tax depreciation, there's all those things that come into it. Now, obviously, as I said before, tax is a bit more of the accountant's domain, but there's still...
But you can touch on it.
There's still definite elements and there's things we can do. And then when it comes to time where you're going to dispose of a property, if that's part of the plan, we're going to sell down an investment property or it's time to sell, whatever needs to happen. There's obviously capital gains tax that comes into it. Now, there's things we can do legally to try and mitigate some of those capital gains. And again, working with a good accountant, we can help definitely do that. And then there's also trying to mitigate some of those risks that come with having a property. So you've just taken on a new property, you've got a large mortgage, maybe you've got kids at home, you're the breadwinner, whether you're the husband or the wife or a combination of both. Now, what happens if someone gets injured and is off work for a period of time? We've just based this entire plan, and the bank has lent you all this money based on you or your wife or your partner
and your circumstances
working
at that time.
Full time on your salary. Now, you're off work for 6-12 months. That's a big risk because everything is based on you working and the income coming in. So the income dries up, everything else falls apart. So we can mitigate risks through things like insurance or income protection, which obviously most people don't like talking about or paying for. But it's a great way to mitigate some of those risks.
So you have access to the knowledge of how other people have handled these problems in the past because you're speaking to other clients.
And then there's other thing we look at, again, with the help of a lawyer, is the estate planning point of view. So if you buy a house or a unit or investment property with another person, whether that's a partner or a business partner or family member, what happens if you pass away? What happens if that relationship goes sour? There's things we can do to put in place from a legal perspective to say, okay, if I want to sell the property but you're not ready to, you have the right to buy it off me, I have the right to sell it to you. If you get divorced or if you pass away, then your partner, if we're business partners or we've gone into this joint venture together, what does that look like legally? So it's just having that.
They are tough questions.
Very
tough questions.
Very, very tough questions.
But they're normally the most important, or the toughest.
And unfortunately, the excitement that comes with buying property and everything, and you can see it getting built or you're getting the keys for the first day, no one wants to think about, what happens if I get divorced from this person that I've just married 2 years ago, or we're just all excited about we finalise this project, and what happens if it falls over? So we kind of play devil's advocate from that perspective to say, okay, this happens. And more common than not, this is going to happen. So let's just put in place, we hope that this document never ever gets used, everything runs smoothly. But in the case that someone breaks up, something happens, we've got this legal document that says this is how it's going to happen. So we have that forward planning. We're called financial planners for a reason, because we're planning ahead.
It's in the name.
We're asking those tough questions. We're looking forward, where unfortunately most people have put the blinders on and don't really want to ask those or answer those tough questions.
No. And it's good to confront them. Once again, it could impact on the goals. And there are always things that it may even adjust the goal.
And I think a little bit of planning can make a big difference long term, and save you obviously a lot of money. A lot of money.
I agree with that wholeheartedly. So then, for finding the right financial planner, so somebody, as we're saying, we're assuming that a lot of people are new to trying to plan their finances, which is not something taught in school. So
definitely.
You're fresh out, you've come into some money, or at least you've been lucky enough to be in a situation where there is an amount, no matter how large or small, that you know that you would like to put somewhere to grow. What are the top 3 tips then for finding the right financial planner? What should be those questions that they're asking?
I think number 1 would be, can you help me in my current situation? So there's hundreds and thousands of great financial planners all across Australia. But unfortunately, what we haven't done great as an industry is that it's so varied. So me as a financial planner, I work with typically people under 35 years old, and that's kind of where I like to specialize. Whereas the planner next door, he might hate working with younger people and only work with retirees. So it's a bit hard to know just from looking at a website or looking from the outset, can that person actually help me in my current situation? So I think number one would be, have you worked with people like me before? And can you help me in my personal circumstances? So I'm a business owner, I'm not married, I've got lots of money to invest. Can you help me with that? Or I've got 2 kids, we're married, we've got no money and we're in a lot of debt. Is that typically someone you work with? So I would ask that question up front.
Are you the person for me?
Are you the person for me? And then when it goes to trying to find someone, I would maybe talk to other people, whether it's your friends or family or people in your circle, colleagues at work that are typically in a similar kind of life stage to you, or someone that in your similar position, and maybe ask them whether
someone trusted.
And maybe ask them if they've worked with a financial planner before.
Yeah.
If you work with an accountant or work with a mortgage broker, a lot of financial planners have relationships with them, so it's always good to try and get some knowledge first. And what I'll usually recommend when people come on board, if it's the first time that they've ever dealt with or spoken to a financial planner, is go out and interview maybe 2 or 3
great advice.
Financial planners.
So
typically we like to see ourselves having a long-term relationship. So we don't like you to come in tomorrow, give you some advice, and never see you again. We typically take a longer-term approach. So if we're going to be working together for the next 5, 10, 15 years, going to interview 2 or 3, it seems logical or seems like it might take a little bit of time up front, but if you're going to commit to someone or you're going to invest your life savings with someone, you probably want to get to know them a little bit first.
Excellent advice. And we try and give that advice when we're speaking to people that are interested in property. Is how many agents have you spoken to? How many properties have you actually gone and seen? You can't just rely on seeing one thing unless it ticks every single box, but it's just highly unlikely that will occur. So there will be things that you like and dislike. So you've got to start asking those questions. Fantastic. Okay, this is an interesting one. So we'll see if we've got a case study here, and if you can answer it, you can answer it. If you can't, then that's okay, and we'll find something else to talk about. But can you give us an example of how working with a financial planner has helped a first home buyer?
Yeah, definitely. So I had a client come on. It's actually just ticked over about 3 years now.
Oh, beautiful. Okay, yep.
And we sat down, and that was the main goal. Like most people have the goal of wanting to buy their first home, which is obviously a great goal to have. And they weren't really sure where to start. They said, okay, this is what we want to do. They had, I think at the time, had about maybe $5,000 in the bank. On a great income, just started working their first kind of career job, so earning good income, minimal debt. We put in place a savings plan and said, right, here's the goal. We want to have $100,000 for a deposit, and we want it in, say, 3 years' time.
Excellent.
So now going back to the fitness example of how do you get fit? Okay, here's a plan. Just run every day, please, and eat healthy, and good luck. We'll see you in 3 years' time. Which, as I said at the start, some people take it, run, easy done. But for most people, they need that help and accountability and support. So what we've done over the last 3 years with this particular client is we put in place the plan, and then we check in on a regular basis. We can plug all their finances into a program that we have, and gives us viewing access of their bank accounts. So we can see on a monthly basis what you spent on Uber Eats, what you spent on Netflix, what you spent out at the pub, and not a way of saying you're not allowed to spend money, but we said this is the plan, this is how much we need to be saving. And then for the last 3 years, each month we sit down or through a report, or every 6 months we get together and say, okay, how's it going? Are we on track? What do we need to adjust? Making sure that we're sticking
where
to
are the weaknesses,
sticking to the
strengths?
goals. Because like anything, the first time you do it, it's going to be hard. It's going to be difficult, and it's hard to save money. It's hard to stay on track when you've got all these distractions. You've got your friends booking trips to Bali, or you've got weddings and engagement parties and bucks hand, all those things that are easy. It's easy to spend money. The companies make it really easy to spend money. So by working with us, we held them accountable to the goal. We kept them on track, and we've gone. And a couple of months ago, they purchased their first property.
That is fantastic.
And reached the goal, and they
excellent.
Moved in. So it was
great.
that
locally here on the coast?
Locally, yeah.
That is fantastic. But once again, everything seems to be centering around a theme, and the theme is to be organised and to have a plan. And even if that's not you, there's someone there that can support you in trying to be that person.
Because unfortunately, when it comes to finance, most people it's too much, it's complicated, which it is, and they just put their head in the sand and they just don't want to face it. So if we can bring that up, we can start talking about it, we can get it out in the open, and even people in not so great financial situations, by working with us, we can uncover and realise that maybe it's not as bad as you thought. Yeah. And then we can put in place a plan to either pay down that debt or get you in a stronger position.
Excellent. Well, that's fantastic. A great case study. I'm very happy that you had that example ready to go. That's fantastic. So, wow, that's an interesting question. I wrote these myself, mind you, so I should probably know my own questions. Here's a couple. I thought, all right, so let's drill down a little bit then into how everybody gets paid, because I thought this would be an interesting question.
Definitely, great question.
Because I think people would think, all right, so what's the catch here?
Yeah.
And hopefully there isn't a catch, but how does a financial planner get paid? Is it the bank steps in like a mortgage broker, or is it the customer entirely centric?
So again, not a super simple answer for you, unfortunately. Like most things in our world, it's more complicated than it needs to be. So traditionally, the financial planning industry was all sales based. So you come to me, you need life insurance, I'll sign you up with life insurance. I get paid a commission from the insurance company. Yeah. You don't pay me any money, similar to a mortgage broker.
Did they have to declare that there was a kickback?
There was a very long time where it was a very grey area.
It was understood.
Where they've obviously got a lot better at now at cleaning it up and making it a lot more regimented. So I came in obviously I've only been in the industry for a shorter period of time, so I've only seen the relatively the good side of it, and unfortunately there's a lot of bad that used to happen. So they've gotten better at cleaning it up, but still today, similar to the example of me working with younger people, next planner working with older people, everyone tends to have different fee structures or fee models. So there's typically two types of fee structures.
Okay, yep.
So the way we work is a flat fee basis. So you need X amount of advice, or you need advice on these particular areas. I'm going to charge you a fee up front, and we have to say, James, this is going to be the fee. Do you want to go ahead? Yeah. So this is just us. So we say, this is the fee. Do you want to go ahead? This is what it's going to be. This is what we're going to do for you. So it's based on a fee for service basis. These are the services we're going to provide, and this is going to be the cost. So we charge either an upfront fee to say, okay, let's sort everything out, put all these things in place. The fee is going to be X. Now, if you need us on an ongoing basis, we're going to charge you a monthly fee, like a monthly kind of subscription or a monthly personal trainer fee to do these services. So everything's based on, this is what we're going to do, and this is the cost. And you know that up front.
Yeah. So you've got KPIs, and then you have to stick to that.
Definitely. And now the other approach is a percentage or a commission-based approach.
Yeah.
Now, it's not illegal, or it's not wrong, or there's nothing wrong with charging this way. It's just a different approach. So if you sign up for life insurance, or you get, if you place insurance with me, I can get paid a commission or get paid a percentage from the insurance company. So you might not pay anything, but I will get, as the financial planner in this example, I'd get paid from the insurance company, just like a mortgage broker would get paid from a bank. So that's on the insurance side. There's a commission built into that. Now that's slowly getting taken away, and over the next couple of years, that's getting phased down or phased out.
Did the Royal Commission have anything to do with that? Did that impact on the financial planning sector as well?
Massively.
Is that because a lot of the majors had financial planning arms anyway?
Yeah.
And my understanding is they're severing, most of the major banks have severed their ties with their financial planning arms.
So the problem came, and what's brought this on, this change, and why we tend to see a lot more planners moving to a fee for service model, some slower than others, but that's where it's moving towards. Is there was a conflict, and whether it was intended or not, there was still a conflict. So you had a bank that provided mortgages and bank accounts. Now you had a financial advisor arm to that. Now you walk in the door as a bank customer and say, they say you need to speak to a financial advisor. Now you're speaking to that financial advisor as most people are thinking as an independent. They're giving you advice that's in your best interest. What tended to happen in the older days, and probably still today, is that they said, all right, James, here's what we believe you should do. We're going to recommend product A, B, and C to you. Here's your three options. We're going to recommend product number one because we believe it's in your best interest. Turns out that product has the same logo as the company they work for. So if you walk into a Porsche dealership, the salesman's not going to try and sell you a BMW. He's going to sell you a Porsche. So you know that. Whereas you walk into an advisor's office, you're assuming you're getting independent advice because you assume that they're giving you professional advice.
Yeah.
But what happened was that they get a kickback if they recommend their own bank product.
Okay.
They get a commission. So if they go to a bank up the road, they don't get as big a commission. If they go with the current bank, they get a higher commission. So that's obviously...
Was it legislated? Was that behaviour legislated against?
Yes.
Before the Royal Commission?
That's what's kind of brought it all.
Interesting.
It's a perfect storm of all this happening that's caused all this, all these changes.
Yeah. They were very loose with home loans.
Very.
I mean, to the point of a Royal Commission now is just basically making the banks do what they should have been doing for the last 15 years.
Definitely. Yeah.
So now they're doing it finally.
So there's a lot of things where obviously you have to fully disclose what any kickbacks are, what any commissions are. So you as the consumer know exactly what that is. If I work for a major corporation or if I'm linked to any financial products or any financial services, I need to disclose that up front and say, I'm actually employed by XYZ company. I'm only allowed to recommend these products to you.
Yeah.
So it's not illegal of what happened. It's just there was no disclosures.
Yeah.
Like there was no, you as the consumer.
They were missing a step.
Yeah. So it's just, so that's the issue with the commission-based model is that there's that conflict of...
There's room for manipulation.
Yeah. So are you giving me the best advice? Are you recommending the best product for me? Or are you recommending the product that's going to pay you the most?
Okay. But now they do. So if you say, for example, once again, I have this particular insurance option A that we would highly recommend.
Yeah.
Do they then have to say, I know you touched on it, but if for insurance, I am going to receive this amount of money if you choose to take the option I've put forward.
Yeah.
Okay.
Yeah. So it has to be fully.
Well, it's up to the person. If they think the person deserves it, then.
Yeah. So it's fully disclosed. So some people take that commission as the advisor. They say, okay, this is how I'm going to get paid. I'm going to get paid from the insurance company. I'm going to get paid this much.
Yeah.
Where we've taken an approach, and a lot of other financial planners do. That's okay. We're going to take the commission out. We're going to take all that out, and it's going to make your insurance premiums cheaper.
Yeah.
But we're going to charge you a fee for that.
Okay.
So we're going to charge you a flat dollar fee, but ultimately it's going to put you in a better position because now there's no conflict.
Yeah. We're here for you.
There's no conflict
We're entirely here for you.
of what products we're choosing because we can, you're paying us, and that's the only way that we get paid.
Okay. Wonderful. Very comprehensive. And nothing's ever simple. But I think you made the complex seem simple.
Unfortunately not.
In any walk of life, I've noticed. Okay. Well, that actually sums it up. I think, Ross, this has been really, really informative, and I very much appreciate you coming in today. Thank you for your time.
No problem.
If you want to watch the full interview, make sure that you log on to the Property Investment Hub, and very soon we'll be talking to you. So I look forward to tuning in next time. Thanks, Ross, and we'll talk soon.
Thanks, James.
Thanks so much for listening to this episode. I hope this has helped to maybe answer some questions you had about working with a financial planner and if hiring a financial planner is right for you. So as discussed, if you're looking for someone to help you with your money, there are plenty of great financial planners who may be able to help you in your particular situation. So don't be afraid of reaching out and getting some help. Just be sure to do your homework, and as always, don't agree or sign anything unless you're 100% comfortable. Hope you have a great week.
If you've enjoyed this episode of the Young Money Podcast, make sure you subscribe to keep up to date with all the latest episodes. And feel free to leave a like, comment, and share it with a friend.